Hi, good morning. Welcome everyone to the second day of ArabNet Kuwait 2017. Hope you enjoyed your morning coffee and the morning breeze. It's great weather today. Today we're starting the day with two halls running at the same time. Hall A will tackle digital commerce and ad tech will be in Hall B. The best way to keep track of both agendas is to download the app, ArabNet Kuwait. So don't forget to download the app. Today's topics will highlight the latest trends in e-retail and e-commerce, including omni-channel and on-demand strategies, as well as fintech and banking innovation, including mobile banking payments and the future of the branch. Before we kick off with the first panel discussion, we'd like to play a fintech video prepared by the ArabNet team. Our first panel discussion will tackle new trends and innovation in fintech. Please help me welcome the moderator of the session, Mr. Ammar Hamadian, Head of Strategic Management, MENA for GSMA.
Good morning, everyone. I look forward to a very interesting discussion with my esteemed panelists. Mr. Hadi Raad from Visa. Please welcome him to the stage. Mr. Fadi Shalouhi from Kuwait Finance House, KFH. Mr. Mohammed Rashidi, Executive Chairman of One Global in Kuwait, and Mr. Tariq Saleh from Gulf Bank.
Sorry.
So before we start, I'd like to give the panelists a few minutes to introduce themselves, their backgrounds, what they do, and then we'll start shooting questions at them. So if we can start with Mr. Tariq, the far left.
I'm sorry, I didn't hear you. Can you say that
Just
again?
a quick introduction, please, quick introduction of yourself, what you do, and your organization.
Okay. طارق الصالح من بنك الخليج. I'm involved in the investment area, and we're happy to introduce to you today the first digital investment platform in Kuwait.
Hadi Rad, I head digital solutions for Visa in the SEMEA region. So digital solutions for Visa focus on helping the... Sorry? Maybe I'm a little bit far from it, but it's on. Okay. Yeah. So digital solutions in Visa support the business in helping markets grow to cashless industries and cashless economies by supporting growth of everyday spend of consumers using digital, by supporting expanding markets to new market segments and new types of consumers, again through digital initiatives. That covers obviously working with fintechs, which is going to be a lot of our discussion today.
Mohammed Rashidi, Executive Chairman and the founder of One Global. One Global is a digital innovation company based in Kuwait, and it has offices in 16 countries. It has a multi-vertical platform that connects fintech as a core, and on top of it, it has digital tourism, digital healthcare, and digital content. We will talk more about what we have and our reach and the business continuity strategy that we are having, how we are disrupting this market, and how we are collaborating with banks during the session, inshallah.
Fadi Shalouhi, I'm the Group General Manager of Kuwait Finance House. Kuwait Finance House is a multinational Sharia-compliant bank, one of the largest in the world. We're present in Turkey, Bahrain, Malaysia, Germany, and Kuwait. We're here to discuss how fintech can help us serve customers better and reduce costs, and hopefully make some money.
Great. So I think it's only appropriate to start with the banks with my first question, so I'll go back to KFH. If you can give us an idea of your strategic plans of transitioning from conventional banking, as we know it, to the new world of financial technology or fintech.
Conventional banking has many meanings in our context.
Fintech has many meanings as well.
Yeah. So, one, we're not a conventional bank, we're a Sharia-compliant bank, so that's the first aspect. The second aspect is moving from the traditional banking, if you will, and the branch-based model to the newer fintech model. Like every large bank with a large history comes a large legacy. So the problem in innovating is making the choice of what not to do. So to us, it's a matter of, one, making no regret moves, because the investments are not small and the capacity is limited in terms of people, systems, time, and the challenges are many. So our primary challenge is not technology, because technology is readily available. Primary challenges are the resources you can invest and how much can you do at one time, and what are you allowed to do from the regulatory perspective. The cost of, other than the cost of technology, our cost of compliance is massive. And that's a fact that our brothers and other banks will also validate. The cost of compliance today is the largest burden on any financial institution. So fintech cannot, I think, replace banks. They can work a lot on the top layers and the customer interaction layers, maybe. But given the burdens that we have in terms of capacity, investments, and compliance, the future is very challenging. And it's about what not to do and not what to do, as far as we're concerned.
So obviously you're prepared to put more investment in the technologies and basically ride the wave of technological advancements in fintech. Now that comes with and the unescapable fact of collaboration and partnering with technology providers. In KFH, do you actually have an ecosystem of technology partners that you work with, or you develop your own technologies in-house?
This panel is very relevant to that discussion because we've recently launched with One Global our e-wallet, MasterCard NFC payments. At the same time, we're obviously working with Visa on a lot of initiatives. Please don't feel left out. It is what it is. We also, as KFH, as a group, we have the benefit of having IT companies related to us, like ITS. So we're open, yes. We are making a lot of investments, but again, it's about making the no-regret moves. So are you investing in the right technology, and will this carry you forward in the next 2 to 3 years? Our investments with, as you can tell, most of the innovation is in payments. And this is where the majority of the investments are going to come from banking. The no-regret moves are investing in the technology, in VTS, for example, from Visa, or MDES from MasterCard with the right partners, which is a multi-million-dollar investment. But we know this is the trend going forward because of security, because of speed, because of many reasons. So yes, we're open to working with partners, the right partners. Yes, we're making the investments. Again, how much of it and what not to do.
Mr. Tariq from Gulf Bank. Earlier we were speaking about your niche is in investment banking. How do you think fintech is going to actually change the landscape of that niche client base that you guys have, and how are you going to transition the way you actually manage, high net worth people to work on technologically advanced platforms, managing their wealth?
Yeah, that's an important question, Ammar. Let me highlight one thing. The issue of traditional financial institutions and fintech, and how do you approach the two kind of organizations is very important, and how do traditional financial institutions go about the new technology and innovation is critical. Just to give you one piece of information, it's projected in 10 years, 2 billion people will have their first banking interaction through their mobile phone. This is staggering. That means our kids in 10 years will not go to a branch. They will have their first banking interaction, first banking experience on their mobile phone. Things are shifting in a big way. Here in Kuwait, we have more than half of the population under the age of 30. About a quarter of the population less than the age of 20. The demographic play a big part. The younger people are more tech savvy, and they're looking for a distinguished, they call it moment of truth kind of experience, a long-lasting experience when they interact with the providers. So, for example, all of us we had experience with Amazon. When we go to Amazon homepage, it's different for all of us. We expect it to be customized, and that's the kind of experience that more and more the younger generations are looking for. So how you approach that is critical in terms of the established financial institutions. And you can do it in a number of ways. And I think there's a lot of discussion yesterday and I'm sure today in terms of how traditional financial institutions tackle fintech, whether you partner, whether you buy, whether you build it in-house. Some of the research I've come across published by Capgemini, they noticed that traditional firms, the fintech set the standard. And even though traditional firms have done a lot in terms of catching up with innovation, but it hasn't really gone as far. And they've noticed that for financial institutions, they've equally between partnering with fintechs and trying to build it in-house. So different financial organizations, I mean, it's critical today with the environment that we're in. Technology, you have to have a digital-first strategy. The demographic is changing. The environment around us is changing. We have to catch up. We have to do more. Regulation is very important, Ammar. For a long time, especially here in this region, traditional financial institutions are protected, and that's very important because regulators, they want to make sure ensure the stability of the financial system. However, you cannot be protected for the long term. You have to catch up. You have to play a proactive role. So things are changing. You have to have a digital first strategy, and I'm happy to talk later about Gulf Bank, how we approached it, especially in my area of investment. I mean, Gulf Bank is one of the first, not just investment, but we're the first bank, for example, to showcase and introduce the facial recognition in our mobile banking. And we're happy today to introduce as well the first digital investment platform. And I'm happy to talk more about that, how we went about it and how we introduced it, and the options we have and how we went about building it.
Okay, Mohammed. I know Mohammed and One Global work very closely with banks, obviously, but with telcos as well. And we know that telecom operators are in a stage where they have to change their business models to actually combat the threat of over-the-top players, OTTs. I'm going to give an example of WeChat in China. Today, this messaging application enables you to actually apply for loans, make peer-to-peer transfers, pay for mortgages, and a lot of other banking services can be done from a chat sort of platform. How do you think the ecosystem that you work with, whether it's banks or operators, should actually keep up with that, and what is the strategy that should be put in place to combat the threat of over-the-top players, bearing in mind that these OTTs are not regulated either by the banking regulators or the telco regulators. So it is a real threat. It is taking a big piece of the pie from both industries. How do you think, looking from the outside in, this will have an effect in Kuwait and in the region?
Interesting. So you mentioned something. These OTTs are not regulated. So we are regulated. So this is the big difference over here. One Global, this ecosystem that we have launched, actually we are not new in Fintech. We started back in 2007, and we launched Saraf Mobile in Sudan. And when we launched it, it was only Nokia phones and using SMS and GPRS. SMS, just bulk SMS from any global operator. So Sudanese mobile operator were not benefiting from us, neither banks. The money was with a network of people, and it was totally isolated from the central bank regulation. Actually, it was a big success because in 1 month, with 100 agents, we made a float of $250,000 in our network. The banks and the operators went to the governor of central bank and said, what is happening? And this is the dialogue that's been done with the central bank, that central bank is caring about customers, to protect end customers. And this money is not under my supervision. From that time, when they shut us down, we started thinking of regulation. So we built our regulation, the RegTech platform, where we have the anti-money laundering, we automated anti-money laundering, we automated the anti-terrorist, we automated blacklisted from United Nations, blacklisted from local banks. So we have the most comprehensive RegTech platform in the entire region, because we are working in 16 countries and we have controls from each and every country, where it's making our platform rich and comprehensive. Talking about the business model. The business model is the key. Actually, what is fintech? Financial technologists are there since ages. These traditional banking systems actually is a financial technology. What we are talking about today is not fintech. We are talking about the digital era, the digital transformation of fintech, the way that financial technologies behaves in the digital era. And this is the way that it started with the wave in 2009 by introducing the cryptography Bitcoin. So over that time, people saw that there is something happening. Banks start to be shaken up. Whatever been happening before that, from mobile operator launching a wallet, it was a closed loop. The operator is making a top-up or a transfer or is making a payment for their customer. They cannot go and sell. They cannot do any transaction without going also to banks. So banks been in the partnership triangle since the beginning. And it will continue. Central banks need to change their mentality, and the regulators. In some countries, central banks are different than regulators. Like in Turkey, BBDK is the regulator for financial sector, but central bank is the one who is putting the policies and monitors. They need to change their mentality and become like an incubators. They incubate everybody, and they try to host and support startups. If you are looking for the new way of creating jobs, actually better to enhance the current ecosystem and emit startups. Those startups will hire people. So it will observe all the unemployed people inside the market. So regulators, if they can use those startups as a catalyst or as an accelerators for banks, banks can benefit from that. And it will be a win-win situation for everybody. What is happening from disruption in many areas like WeChat, what they did in China, China is totally different market. The dominancy that is happening from WeChat enabled them to just do transaction within their network. It's actually a closed loop. It's a closed loop. It's not an open loop. But because it is huge, it is 400 million users, everybody's seeing it as a payment platform. Actually, it's not. It's closed. It's like the example of mobile operator. But because the community, I'm having a businessman that can do a transaction, behave in the morning as a consumer, or in the morning as a business, and in the evening as a consumer. So there is nothing. Only the dominance is the one who's making everybody obsessed. Wow, we see WeChat, they are taking over. No, they are not. And they cannot take the system outside. It's regulated. Still, there are many activities that need to be regulated, that need to be having controls from the central banks. And central banks is doing that not to protect only banks. Actually, they are protecting the money of the end user because they are obliged and liable for the citizens' money. So this is the way we thought inside One Global. It's very expensive, actually, to have your own data centers, to be PCI DSS compliant, to do a revenue assurance, to do a risk management, to do a compliance management. All of that investment One Global put in place in order for scalability and to mitigate the risk that is happening in this industry. So this is how we see, and we have very excellent two examples we are working with over here. Is as my brother Fadi said, that One Global launched together with KFH in a very nice team spirit, the platform of NFC payment in the entire Middle East and Africa. The first platform to launch MDES is One Global platform with KFH. The second excellent example is with my brother Mohammed Al-Sharif over here from Warba Bank. We launched a complete, fully digital importing process from the app, from OG Money app. If you download OG Money app today, you can activate W Wallet without going to the bank. When Brother Tariq said that in the future people will not deal with bank, they will deal with the app, actually it's happening today. We are having our customers, a big community from our customers, they started opening their account with us. And they start transacting inside the app. Because everything is going into this ecosystem. Everything is going digital. So everyone is transforming into that. Either if it is e-commerce, and this is what we will talk later about the Omni-Channel. What is the Omni-Channel? It's the single experience, actually. The channels are multiple. This is the online, there is the physical. Physical will stay, but the experience will be different. And there is the mobile. So the augmentation across these and having one single experience, like the one-touch experience that we introduced, to have fingerprint where you love it in your handset. We didn't change it. We use it. Our slogan is mobilize lifestyle. So we are efficient and making your life efficient. We don't change it. Your lifestyle is there, but it's going to be more efficient. We use what you like and make it in your favor with our services.
Thank you, Mohammed. Apparently, he's very passionate about the solutions they develop at One Global. Mr. Hadi from Visa.
Yes.
Now, most of us know or have a general idea of the business model of Visa and MasterCard as lenders, whether it's micro lenders or on a bigger scale. How is Visa going to actually transform and evolve to keep up with the new developments of fintech? And do you see threats from the likes of the startups that we have seen in the video before we started? So if you can give us a strategic insight into Visa's plans.
Yeah, indeed. So actually we work with many of these names and startups that you're referring to, as well as big technology players that are entering into the financial system through the angle of technology. So one important aspect as the consumer moved from the physical world more and more and increasingly to the digital world is that we need to make sure that payments in digital is as secure and as frictionless, and even if not more frictionless and more secure than it is in the physical world. Not only that, it has to be interoperable. So to Muhammad's point, it cannot be closed loops. Sometimes a closed loop can be big enough, but most cases, closed loops cannot be big enough to satisfy consumer demands. So this is what we work on at Visa, making sure that this shift to digital is secure, interoperable, and standardized. So and what we do is that we provide capabilities, platforms, and then it is about local innovation to build on those capabilities and platforms, leverage the power of VisaNet globally in order to introduce services that satisfy the market. One example is Visa Token Service. So Visa Token Service ensures this move of the PAN, which is the Visa card number, all right, into digital in a very secure way, as well as being standard with lots of security measures. And then that platform can be used by several players in order to go digital, whether on mobile, and we've seen that whether with issuer wallets, like the one KFH is launching and some other issuers are launching, or global players like Apple Pay, Samsung Pay, Android Pay, or even beyond mobile, wearables. Today, Fitbit and Garmin announced that they will enable, or actually launched their Fitbit Pay and Garmin Pay, which is based on, powered by Visa Token Service. So it's all about how you take that card number to different digital devices, to different environments, and enable it in an innovative way that secures the market. Innovation could come from local players, and that's why we opened up VisaNet APIs through our developer platform, so technology players, fintechs from anywhere in the world can access all the power of VisaNet through standard APIs defined, and then innovate on top of it and introduce new services. And there are lots of examples of how players from this region leveraged these APIs to introduce very innovative products and services. If I have the time, I can talk more about them.
Thank you. Fadi, I want to take a few minutes to talk about the risks associated with every technology comes with risks that have to be mitigated early on. And particularly when we talk about AML, because the world is becoming an open border, there will be cross-border transactions. So will the fintech revolution actually change the way we look at AML and how we do our KYC for customers, and how you plan to actually mitigate those risks in the future?
It's a very good and a very big subject, because and maybe that's an idea for Arab Tech. We might need to talk very, very soon about RegTech. Well, no, Omar. So the regulatory innovation is, I think, one of the key concerns in the future on, and that's going to affect like one global like Visa on what is possible and what you can do and cannot do. Let me give you just a side story on this. We all read the news, right? And to me, while 5 years ago we used to measure the customer experience in the number of clicks, correct? And you thought you could not beat the one-click buy that Amazon introduced. And then one of the big fintechs or one of the big innovators in the world came in and removed the click altogether. Uber came in, and then you no longer click. You just walk in and walk out for payments, right? Can you beat this? I don't know. Can you beat one click? No, and it's about customer experience. However, today, if you do a Google search on Uber, most of the news that comes out is about regulatory issues with Uber, right? So, yes to innovation, at what cost? And do you innovate and then deal with the consequences, or do you deal with the consequences like banks have to do and then innovate? Because sure enough, we hold what's dearest to governments, to people, to companies, which is money. And we are still suffering today from what the 2001 did to the airline industry and to the banking industry. Today, we are so regulated that, any single decision has to be approved by many, many parties outside of the bank. So can we afford to? No, we cannot, and we hold what's dearest for you. So at the same time, let me give you another analogy. We're just talking about it. So now, the new world, if we imagine the world in 5 years, the world without screens is one that's starting. So for those of you who have an Alexa at home, the world with no screens is there. Is it going to continue? Do we want to be a part of it? Can we afford to be a part of it? I don't know. Would you actually would you even allow a machine in your home that's always listening and has access to your money? Always listening, always on, and it has access to what we hold dearest after our family, which is money. So Amazon invented it, and it was accepted because Amazon only knows your purchase history. Imagine if Google had introduced first a machine that was always listening. People would be scared. So again, there's a matter of compliance, of personal acceptance, of right timing, and the cost of compliance on banks is very, 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 very heavy. So if you, and again, to us, it's a matter of, what do you call it? Omission and commission. So what's your level of commitment as a bank to certain initiatives, looking 5 years down the road, where, probably our kids will not need to learn how to drive, with cars now being the big thing. Okay, let's not even talk about stick shift. Let's talk about automatic transmission. Or will our kids 20 years need to know how to drive? So one, it's a matter of what do you commit to, and second, the regrets of what you choose to omit and not to do. Technology is here, and it's not the future. It's just not unequally distributed. Cost of compliance is now massive. Manpower is massive. Manpower is very expensive. And the banks, and I'm sure Tariq will agree with me, we are no longer in the business of making money. We're in the business of reducing costs. After the financial crisis, after September 11, banking are slowly becoming a commodity, like electricity, like water. Banking is a service that's offered. And how well do you manage your costs? Which is, in my view, what the direction of the next 5 years is going to be. The bank will no longer be a destination. The bank will be a switchboard, connecting merchants, connecting people, connecting other banks, and then fintechs will come and fit certain verticals out of all of this within the space of our regulation systems and technologies, fitting with, the current standards. So The bank branch will always be there, but it will be one of the destinations. But the bank, a bank, will be a switchboard connecting fintechs, connecting regulators, connecting banks, people, merchants, and the critical mass, hopefully, that will allow banks to survive.
Thank you. Tariq again from Gulf Bank. We know that there's a big wave of artificial intelligence with different manifestations that is coming. I was reading an article about IBM building an artificial intelligence platform that will act as a lawyer. So in the future, you will not need to hire a lawyer if you have an illegal case, because you will get a full sort of analysis and advice from a computer. So as an investor, why would I go to Gulf Bank in 5 years and ask about advice when, you know, a computer mainframe can give me exactly the advice that I need? How are you going to actually cope with that?
It's a good question, Ammar. Just a quick comment. I agree with Fadi in terms of the financial cost. And financial institutions are trying very hard to reduce cost, and technology is definitely one way to go about this. But interesting enough, for the past 130 years, the cost of financial intermediation, meaning everything that we do with banks, financial institutions, the actual cost has been 2%, and that hasn't changed for the past 130 years. So financial institutions haven't made that much progress in terms of reducing that cost. And today we have a real opportunity. As Mohammed said, I mean, technology has been there for a long time, but today we need to innovate. We need to push it forward to actually reduce cost and to provide our clients those moment of truth experiences that make a long-lasting impression. And that's what we are attempting to do at Gulf Bank. And the way we approach, maybe in my area of investment, introducing this new service, it wasn't, to be honest with you, it wasn't technology for the sake of technology. It wasn't, oh, let's have this new toy. And it really came from a customer need. That was, it started back in 2015. And at that point, you know, as you all know, in the region we're living in, there's a lot of political tensions and it goes up and down. And at that moment, there was some tension going around, geopolitical risks. We saw our clients transferring a lot of money abroad. They want to invest in international markets, kind of reduce their risk, have some exposure in international markets. And we wanted to help them do that. And we did not, we've always kind of thought of ways to provide them with a way to invest in international markets. And we went to our clients and we tried to get an understanding what exactly are they looking for. And we did a lot of research. We asked our clients, and it turns out they wanted to invest in an easy way. They wanted to invest in a transparent way. They want to see where they're investing. They want to keep track of their investment. And they wanted to do it in a cost-efficient manner. Now, in a traditional world, and even for like an established financial institution, especially in the investment side, this might be difficult to bring together. But today, with technology, we were able to think of a way to do it. And I think that's the important part. And that you probably wouldn't be able to do it 10 years ago or 15, but today, that's a possibility. So based on that, we kind of identified the client needs and we thought of a way to do it. And we thought, okay, so now what's the approach? We know you can go and look at those fintechs and they're providing such service. Do we partner with such companies? Do we build it ourselves? Do we buy those companies? And that's like the kind of debate we had internally. And I think that's very critical for all of us here in the room, especially if you're in established financial institutions or you're thinking of developing something yourself. we're talking about technology, but at the end of the day, it's all about the team, and it's all about the human element. And I can tell you 100% that's the case. If you have the human element and if you have the team to deliver that technology, you can work with different providers, you can contract, you can deal with it in different ways. But what you cannot substitute is the human element, is the know-how. And that we're fortunate to have. And we kind of work together. We put together what our clients wanted, how to go about it. And then we built it. Based on that, we decided to build it internally. So that was very important for us. I mean, if we didn't have the resources, if we didn't have the human element, we probably would have taken a different approach. But we had that, and we kind of built it from there. So, I mean, for everyone here in the room, it's yes, technology is important. It allows you to do a lot of things. And today, I think we haven't, the potential to grow with technology is tremendous. I mean, today I was looking at some research as well. In this market, you have 2-to-1 mobile penetration. For every person here, they have 2 mobile phones and 2 mobile lines. But the amount of transaction we do, whether it's paying utility bills, whether buying online, is very low compared to international standards. And there is a great potential to grow with that. So that's how we came about introducing this service, and that's what I think the story of Wise, how we introduced it to allow our clients to invest in the international markets in an easy, cost-efficient, transparent way. And we're happy to build it in-house, obviously, because we had the resources, and that's, I think, the number one element that you need to consider. And then you have to look at the commercial part as well. If you partner or if you buy, how much are you going to buy those companies for? If you partner, how much are you going to share the income with them? And those are all the considerations. But the critical factor is, can you do it in-house? Do you have the resources? Do you have the team? And for us, we had that, so that's how we went about this decision.
Thank you, Tariq. Hadi again from Visa. You guys have a very high penetration rate in the region in terms of credit card adoption. But let's go a bit outside the region to adjacent regions where there is very high rates of mobile penetration and extremely low percentages of bank populations. And that, to me, seems an opportunity for companies like Visa to actually tie that high usage of mobile smartphones to people that have a great need for banking and lending services. What are you guys doing about this phenomena?
So, whenever there is a store value of account that is legal by local regulators, that can operate in the financial system, right? There is always the opportunity of front-ending this with a Visa number, and from that point on, that account becomes global, becomes interoperable, operates everywhere, whether in e-commerce or in mobile environments, face-to-face, in-store, remote, everything. Like just once you put a Visa card number in front of a store value account, you made that global and interoperable. So it's not about that plastic that we see for Visa. That plastic is just one form factor. It's all about the number that is on this plastic card. And that number can go to any form factor. Today, mobile is very popular. E-commerce, like, there's a lot of work that all of the industry has to do in order to grow e-commerce, to Tariq's point before. There's still lots of friction, and this is a big focus area for us, and lots of standards that we're releasing in order to enhance how the consumer's experience in e-commerce is. Take, for example, 3D Secure, which is this one-time password that the consumer has to key in every time you conduct an e-commerce transaction. That is there because of the large security and the huge security that it gives to e-commerce transactions. But at the same time, that's lots of friction. Lots of transactions, lots of commerce are stopped at the point on when you receive that PIN. Maybe you don't have your mobile at that point in time, or maybe the SMS didn't reach, or maybe you didn't know that you need to key in that number there, etc. So now we're working, and we announced a new standard, which is 3D Secure 2.0. It leverages all this advancement in technology, and it looks into tens and tens of additional parameters, including the IP address, the device, the location, the merchant history on VisaNet transaction, the consumer history, etc., and then comes up with a score, a risk score that we forward to the issuers. From that point on, that risk score, accordingly, the issuer decides, do I want to challenge the user with a one-time password, or no, let the transaction go because it's very safe. Statistics in markets that launched has shown that 90% of the time, you pass the transaction at the same security level, and you avoid prompting the user for the PIN, for the one-time password. This is one example of how much we still can do in terms of innovation, in terms of advancement, in order to grow digital commerce in that aspect.
Thank you, Hadi. I think it's time to open the floor for questions. I don't know if we have a roaming mic. Anyone? You have a question there?
Hello, thank you. It looks like in the near future, more and more we're going to have e-commerce replacing cash transactions. When the event of September 11, my sister was in New York, and with the power cut, everybody over there, I mean, they use very little cash, so everything is, with plastic cards to buy everything. So people were left out without being able to do anything, not take a taxi, not pay for anything for several hours because there was a shortage of electricity or systems and everything. So what is it being taken into consideration in the risk side of the business, that when everything becomes more and more technological and you either need internet or electricity to do things that today we do basically just by paying with a cash note, what would be a plan B for that? For example, in a restaurant, we always have a plan B for a system shutdown. If our system shut down, then we do everything manually, to process the payments and everything else. But in this case, how do you foresee this having a plan B for system shutdowns or this type of events, catastrophes?
So the question is?
The voice wasn't very clear.
Yeah, the voice was not clear, sorry. So the question
When,
is that how the system...
I will rephrase.
Here.
Once everything, let's say we are 10 years ahead of today, and we're paying everything through our phones, okay. All right? And there is a natural disaster, and we're left out without internet for 2-3 days.
Okay.
What would people do in that case when you cannot have access to your payments, to your bank accounts, or everything, because everything is online?
Actually, can I take this answer? Actually, KFH wallet today is working offline, and it's updating when you are online. So you don't have this problem of discontinuity from electricity. And not only KFH, actually the whole industry is moving to be offline because of the IoT. The Internet of Things is a true disruption for the communication channel. You will not have the normal communication channel as like a GSM or a Wi-Fi or Bluetooth. There are others are coming like Zigbee and GigaNet and Antiplus. Those communication channels will not require a power. Actually, the battery that you will mount inside the IoT device, it will last for years. So we are going to the offline era. And this is the era where blockchain gonna introduce itself to replace the information net, which is the internet. So it's been taken care of. The only thing that we're gonna face in the future is the energy. Everything needs a processing and a computing power. And this is what is happening with the renewable energy. These sources that being done and what Tesla have done with their innovative battery that lasts for a week, you can do whatever you want. So it is together, moving together. The energy and the computing together are moving head to head, and offline is being introduced again, and it's happening today.
Let me just add 2 dimensions. I know there are 2 questions, I think, in your question. One of them is the reliance on electricity as a Maslow primary header. So it's no longer security now. One of our primary needs is internet and electricity. And it's a very good question. I was reading yesterday that one of the obstacles to the growth of Facebook, you know what that is? The next billion users. It's electricity, not internet. Because you need electricity to power the phone, to have internet to connect to Facebook, which is why they now, using the solar powers and the drones that transmit internet. This is where the next billion users are going to come from. To us, it's an underlying commodity that, yes, we are assuming that you will be connected, even when there's a natural disaster, and I do hope those don't occur, and I know those don't occur that frequently. Your connectivity is going to be the enabler, and what do you do in case you're not connected? Well, that's another issue. But the other problem is the concentration of the risk, right? So if a bank has one data center and that data center is gone, as an example, what happens to your money then? Which is where now a lot of the regulation is forcing, number one, disaster recovery sites, which are in a different country, in a different location, in a different setup. Second, the regulations are also forcing active-active, which means you don't flip a switch to move from your live site to your production site. Right? Third, the technology now is evolving where the centralization is being taken care of. One of the new things that we're reading about now is using blockchain, right? Not Bitcoin, using blockchain, where we're looking at the evolution of HTTP. Surprisingly, today all of us still use HTTP as a protocol for internet, correct? Now they're talking about FPLS or FLPS or something that uses blockchain to distribute the content that you can access, which means your router is down connecting Kuwait to the outside world. Whatever content is available in Kuwait, you can actually peer-to-peer it, right? The evolution to that is censorship. The evolution or depending on how you think about it. But censorship will become even more difficult. So yes, electricity is a very, very important underlying commodity. The other side of it is how does the regulation and banks and technology companies use on distributing what's valuable to you and protecting it.
Thank you very much. I think we have consumed our time for the panel. Thank you, Tariq, Shadi, Muhammad, Hadi. Thank you very much. Very insightful. And give them, put your hands together for them, please.